Bitcoin is back above $70,000. Wall Street is buying again, and the world is asking the same question: is this the time to buy or to run? Some say it's déjà vu, new all-time highs, hype returning, and millions jumping in without knowing what they're doing. Others argue this time is different. We have Bitcoin ETFs bringing in billions from institutional investors, regulation is finally catching up, and even conservative portfolios are starting to include crypto as an alternative asset. But there's a catch. Just because the last 6 months were good doesn't mean the next 6 will be. In this video, I'll show you what's driving Bitcoin right now and why it's not just hype, the biggest risk no one is talking about, and how to decide if you should buy, hold, or wait. Because if you're still treating crypto like a lottery ticket, you're already behind the curve. Let's break it down. Well, first of all, what's driving Bitcoin right now and why it's not just hype? A lot of people see Bitcoin hitting new highs again and think, here comes another bubble. But what's behind this rally isn't just internet hype. There's real foundation behind it. And the game has changed. The first thing you can't ignore is institutional money. Since spot Bitcoin ETFs were approved in the US, over $13 billion have flowed into the market. This isn't retail traders buying on emotion. It's pension funds, sovereign wealth funds, big asset managers, capital that moves slowly. But when it moves the market. And there's more. The macro environment is pushing this forward. With expectations of falling interest rates in the US, many investors are rotating out of fixed income and looking for real return potential. Bitcoin is back on the radar as a hedge, not just against inflation, but against governments, against money printing, against the system itself. Like it or not, the alternative store of value narrative is back in full force. And don't forget the math. The halving already happened. Bitcoin supply got cut in half. Demand is rising. That creates what it's always created: buy pressure. But this time, it's not a YouTuber with red eyes in the thumbnail hyping it up. It's international funds, institutions, players who don't need Bitcoin to make money, but who are now adding it to their portfolios as a serious asset. The kind of money coming in now is different, and that's the money that really moves the price. What I want to make very clear here is that Bitcoin stopped being a small currency a long time ago and became one of the largest assets in the world, and there are several points to explore here. I think you should at least expose yourself a little bit to Bitcoin just because it is definitely very scarce, and I will talk more about that in a moment. And now, a lot of people are looking at Bitcoin, serious people, which brings us to our second chapter. Let's talk about the biggest risk no one is talking about. Everyone's watching the chart. Bitcoin's above $70,000, ETFs are breaking inflow records, and the new bull run talk is back. But while everyone's looking up, almost no one's looking sideways, and that's where the real hit might come from: the government. The truth is, the biggest risk right now isn't the price dropping, it's the environment changing. There's still no clear regulation for crypto in the US. The SEC is still fighting with the major exchanges, and Congress is debating bills that could give the industry more freedom or take it all away, depending on who wins that fight. If stricter rules pass, the institutional money that poured into ETFs could disappear overnight, and this market that looks strong today could crash like it did in 2022 when Bitcoin dropped 65% in a single year. And now the issue has gone political. Donald Trump, who was once against Bitcoin, has done a full pivot, and he's going all in. In May, he said, "I'm very positive about the future of crypto in the United States. I want the future of crypto to be made in America, not in China." Even more than that, Trump promised that if he's elected, he'll ban any attempt by the Fed to launch a central bank digital currency, CBDC. He called it a direct attack on American freedom and added, "I will be the crypto president." But not everyone agrees. Many in the current administration still see crypto as a systemic risk, and they could try to choke the industry with heavy regulation, new taxes, or strict requirements that would kill parts of the market as we know it. The risk isn't technical, it's political, and it's not on the chart, it's behind the scenes. Okay, but how to decide if you you should buy, hold, or wait. Let's get one thing straight. Bitcoin is not a short-term bet. It's a convexity play. Convexity means your downside is limited, but your upside is exponential. You risk losing 1x to potentially gain 10x. That's what makes Bitcoin interesting, not as a trade, but as part of a well-constructed portfolio. Not because it's guaranteed to go up, but because it has the asymmetry every investor should be looking for. If you don't understand that, you'll fall into the trap most people do. You either go all in, hoping to get rich in 3 months, or stay completely out, waiting for the perfect entry, which never comes. Smart investors don't think that way. They ask, how much should I allocate to something that could go very right, and only a little wrong? Allocating just 1% to 5% of your capital to a convex asset like Bitcoin can completely shift your portfolio's long-term performance without risking your financial stability. But if you throw in 50% of your net worth, that's not convexity, that's roulette. Now let's talk timing. The best time to buy convex assets never feels obvious. When it's cheap, everyone's scared. When it's rising, people say it's too late. That's why many top investors use a simple strategy: dollar cost averaging, buying small amounts over time without trying to time the bottom. But none of this matters if you don't have a thesis. If you don't understand Bitcoin as a scarce digital asset with programmed issuance, anti-dilution properties, and growing institutional adoption, then maybe you shouldn't be buying right now. You should be studying right now. Buying without understanding is just as dangerous as ignoring it out of bias. So here's the bottom line. If you have a clear thesis and understand convexity, you probably should have bought already. If you want exposure to asymmetric upside, start small. If you're only interested because the price is going up, you'll likely lose. Convexity is not about timing the top. It's about being positioned before the disruption happens. Because at the end of the day, the investor who profits from Bitcoin's convexity isn't the one who nails the peak. It's the one who survives the volatility.